All right, let's crack open these charts and see what's going on in the stock market today. All right, today's SPY was up 0.73%, and right here we have the bear scenario below 420 and the bull scenario above 420, and there is going to be a lot of questions of whether or not this is bottomed and we're going higher, or if this is just the halfway point within the next bear market. So the way I suggest following that is simply by staying bullish above 420, or at least if you're bearish, wait until we get closer to a resistance level, which is going to be between 427 and 430. And that way, at least if you're wrong about shorting, you have low risk to do so, doing it at resistance. And in the bearish scenario, we are looking for a lower high before we continue lower towards that gap fill at 407, which will also satisfy the price target of this head and shoulders pattern. Now, it's very risky to short down near 420 because if we are just in a correction within a bull market, this is likely going to be the bottom, which means from 420, you would have a very difficult time shorting as we rally higher. But you could wait for higher highs and higher lows before you start to favor that scenario. So it really doesn't matter how you trade. It always comes down to risk management, which means if you're shorting, wait until we get near resistance. And if you're going long, wait until we get near support. That way you have very well-defined risk. Of course, I always tell you the trend is your friend, which means you're going to have the easier time trading in the direction of the trend. But the reason that is so polarized right now is because a lot of people think this is the start of an early downtrend. But if you look at the weekly chart, there's still a case to be made for the bulls that this was simply just a correction within a bull market. And on the weekly chart, this could be the higher low. That is why you're getting so many polarized views of whether or not we're bearish or bullish. As I always tell you, let the chart do all the talking, so it really doesn't matter if you're bearish or bullish. You should be trading around the levels that I give you each and every day, and that is these critical levels at 420, 427, and 430. If we break below 420, we go all the way down towards about 416, and then below that we have 414. On the NASDAQ 100 triple Qs, we're up 1.36% today, and I've been telling you that the triple Qs are relatively the strongest because as you can see, we barely made a lower low on the breakdown below 355, and for the majority of the time, 355 has been holding up as support, so there is a lot of relative strength in the big tech stocks, which has been the narrative all year long, so there's really nothing new here. Above 355, it's really hard to be a bear. You really need to see 355 breaking to get bearish, and then it should be a quick trip down towards 347, and below 347, the floodgates open down into the 330s. So above 355, it's completely fine to stay bullish, especially because we have that gap to fill up there right around 364, and the critical resistance is now right there at 365, or the resistance trend line at 366. On the Dow Jones, we were up 0.31% today, and we did get a high volume hammer candle off the low, but we are very oversold, so it's still possible this is just a dead cat bounce. But due to the high volume and the shape of the bullish candle, if we break today's high tomorrow, that is going to look like a bottom, which means we could see a very impulsive bounce back up towards 336 to 341, and we have that gap to fill above 344. The next critical downside support is 327, and if that breaks, we go fill the gap at 322. On the Russell 2000 IWM ETF, we were up 0.05% today, so we really went absolutely nowhere. But again, we have a high volume bullish hammer off the low at 170, and I did tell you from 170, I think we're going to bounce up towards 180. So I'm not changing a thing about that projection unless we lose support at 170, and in that event, we continue to flush to 164. On the ARKK ETF, we're up 1.47% today, finding resistance at the -5 EMA, but there's a good chance from here, if we can break above this high at 38.4, that we could start to rally towards that gap fill just below 41. If we can't hold the low, you still have that gap fill down there at 36. On the VIX, we were down 6.12% today, and I told you yesterday the VIX 20 is a very good place. The VIX has been crushing from all year long because this has been a bull market, so as long as the VIX stays below 20, it's possible this correction is ending. We've seen the bottom and we're going higher. And if that's going to be the case, I would like to see the VIX crushing back down towards 15 and then eventually getting back down towards 13. If the VIX holds above 20, that's going to look like a different look than what we've seen, and that's going to be more bearish. On Bitcoin, we're currently up 1%, and Bitcoin is still looking bullish of higher highs and higher lows while it's above 27,000, with the next resistance to break at 28,000. And if we break 28,000, I think the bottom is in at 25,000. On Tesla stock, we were up 5.93% today, and we're very close to closing the gap at 262. And if we fly right through the gap fill, the next strong resistance is up there at 275. And above 275, we have the bull breakout to run into the 300s with the gap fill at 290, resistance at 296. And then if we break all that resistance, we should go hit my price target above 300. You can stay bullish above this support at 255 or 244. And if we break that support, you're looking for 230. On Apple stock, we are up 0.73% today, and we're getting very close to critical resistance at 174. And it's very simple for the bears to reject from here and still go fill the gap at 167. So do keep in mind that is a very critical level. Above 174, however, it's looking more bullish, and then we'll likely start running to 179 in the gap fill just above 181. So jumping back over the S&P 500, there's great cases to be made to be bearish or bullish. I simply think it's a bad idea to get bearish near this critical support, because if we are done with the correction, it's very likely going to be that this was the bottom and we're going to start into an impulsive rally from here. So be very cautious if you're shorting. Do it from resistance levels only. That way you have well-defined risk. And if we break this support at 420, you should be getting risk off and no longer bullish, because we're likely going to much lower prices. So remember, it's always down to risk management. Make sure you have a plan and follow it, and be prepared for either scenario. And you should do absolutely just fine to finish out the year. We are absolutely crushing this market in the Stocks Channel, Discord, and Bank Trade Alerts. And you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.